Welcome back. You're watching our special show, Midcap Multibaggers, where we're going to identify not one, not two, but 16 multi-baggers for you. These are the hidden gems which can become large caps. We're halfway through the show, done with 8 ideas for you. We've still got 8 more for you. And our guests, our MARKETWALLAHs, Mr. SP TULSIAN, PRAKASH, DIWAN, AMBAREESH, BALIGA, and DEVEN CHOKSEY, have been in conversation with us. So let's find out what the 9th recommendation is. Ambareesh, let me start with you this time. Titagarh Wagons. This is a stock which has not generated too much wealth. Why have you picked it?
In fact, see, if you have to have the economy improving, clearly you need better roadways and railways for transportation of goods. For a better urban lifestyle, you require better transportation, which is metros. So Titagarh Wagon actually serves both these sectors. In fact, they recently got an order for 2,200 wagons, which is the largest order which railways gave out. They took over Firema Transporti recently, which is basically, has the technology for the metro, wagons. And there, in fact, they have an order book of close to about 2,000 crores plus. And at the same time, Titagarh Wagon is also into defense in a big way. Nearly 100 crores of their turnover comes from defense. So each of these sectors is actually growing decently well. And looking at that, I feel that FY17 itself, they should be able to show about 4.5 rupees EPS. FY18, I think this can go to about 6.5, 7. So looking at that, even a 21p at this point of time looks decently cheap.
All right, then, so that's Ambarish's pick, Titagarh Wagons. Maybe, in fact, it has been a relative underperformer, as Rima said, but maybe there's good times ahead for this company. But let's go back to Mr. Tulsian then. He's going to tell us about a chemical company. Mr. Tulsian?
Nigel, my third stock is Kingfast Science. It's an auto ancillary company, and if you really see, the old name was Hydro S&S, and I recommended this stock in our morning show in the last quarter of 2015 at a price of 300 rupees. And now the price is 900. And the similar stock was recommended as my 2016 pick also at 550, and the now price is 900. But if you recall, at that time there was no expansion being carried out by the company. At that time the capacity of the company was 35,000 ton per annum. But in January 2016 the company has taken up setting up a new greenfield plant of 70,000 per annum. That means the 4 plants at the 4 corners of the country, east, west, north, south, are making 35,000 ton, and 1 plant in Chakan of 70,000 ton has been taken up by the company in the month of January, and it is learned that this greenfield plant has completed its trial commissioning and all that, because this is a company with a Chinese promoter of 75%, and we know the execution capability of the Chinese promoter. And let me come on the product profile of the company. They reinforce the polypropylene with either mica or maybe glass fiber or maybe the other kind of filler items, and they make it as a reinforced polypropylene which acts as a metal substitute for engineering and automobile stock. And this product has great demand because automobile makers are finding it very convenient to replace the metal parts which are now existing because of the better average, because of the safety and all that. And all the automakers, whether you talk of two-wheelers, CV, PV, they are all the clients of this company. And what I have learned that the company, after this completion of the capacity of 70,000 ton with enhanced capacity of 1,05,000 ton, will also be doubling their capacity to 2,10,000 ton in next 12 months itself. But the Q1 numbers will purely be reflecting the old capacity profitability and likely to post an EPS of 6 rupees 50 paise for Q1. That means for the whole year on the old capacity, expect an EPS of closer to about 23, 24. And as I said that the Q2 or Q3 will start contributing double the profits, and this is a debt-free company. That means is still the potential, which has already tripled from my recommendation. And actually in my New Year pick, I have mentioned on a lighter note that I won't be surprised to see the price of stock moving to 2,000 rupees in next 2 years. That means maybe by end of 2017. Though I have my same price target, but I'm keeping a target of 1,050 in next couple of months, because nowadays investors are very impulsive. They want to see the quick returns. So maybe 15% return can be expected from the current price. Target of 1,050 in next 2 months, but I maintain my target of 2,000 also maybe in the next 18 months or so.
Okay, stock could double in the next 18 months. Prakash, the next one you've picked is Thirumalai Chemicals. I remember when the company came out with the Q4 earnings, it was blockbuster.
Yes.
Their margins improved from 5.5% to 16%. They reported a profit.
Yeah.
But you know, the question we asked at that point is, do you think this kind of a financial turnaround is sustainable? Do you think they can continue to post such strong numbers?
Well, I believe so. You know, one of the themes that I picked up through this selection is while these are mid caps, let's say Thirumala, for instance, is just about a 330 crore market cap company, but it has a top line of 780 crores. These are companies, they are niche players and they're market leaders at a global scale. You know, so we talked about Orient being one of the largest exporters of fans. We talked about Precol being the second biggest instrumentation manufacturer in the world. Thirumala also is one of the largest players in the phthalic anhydride and malic anhydride chemical business. Now, these are complex names, so if you keep the mumbo jumbo aside, what it simply means is these are very essential chemicals and the derivatives that are used in a huge range of applications. So you have food ingredients, you have paints and coatings, you have polymers, you have plastics, you have, you know, the application is in cosmetics, personal products. So all of that is seeing a huge turnaround of sorts. And thanks to the kind of benign situation in China on chemicals, what my sense is that all these companies which are looking at exports are finding a huge niche that's kind of rapidly expanding. And you're right, the numbers have been very encouraging. There's a 42 rupee EPS for last year, thanks to the last quarter itself, which was stellar. And today the stock's available on a trailing basis at about 7.5 times PE, whereas it's a leader in that space. So it's a huge pedigree that's backing this particular company. My sense is the answer to your question on whether there is enough traction going forward, they are extremely bullish. They are talking about capacity utilization rates, which will be phenomenal. And if they were to organically also grow in terms of their capacity, it's still possible because there's not much of debt that the company is saddled with. My sense is that chemical businesses worldwide are going through a radical shift where our export orientation is improving as well as the domestic consumption is kind of spurring this whole demand side. Given the kind of traction we've seen in earnings, 60 rupee plus EPS is very, very comfortable for this company. If they have two good quarters also, not only just a full financial FY17, and if you were to discount it at the at the same P multiple that it traditionally has, you would still attain a target price of 500 in the next 18 months, 24 months. So, sound business, very limited downside, and great fundamentals to back the business as well.
All right, then thanks so much for that, Prakash. And let's get in. It's round 3, so let's get in Deven with his third pick of today. Deven, what have you picked for us?
I find that this company Bajaj Finserv is, I think, appearing quite an interesting play. It's a holding company for the Bajaj Finance, as well as I think they have the two insurance businesses, the life insurance business and the general insurance businesses into it. The bigger story is basically getting unfolded in this particular company. The life insurance business, which has up till now remained quite muted, I think is now seeing some positive tractions. So we see, I think, a higher amount of growth coming in from the life insurance. As of now, I think it is contributing about single-digit growth. The general insurance business, as the economy is expanding and as we are seeing larger amount of assets getting created in every space, the general insurance business is basically moving in a double-digit kind of a growth. So this business is both insurance, life as well as general insurance. Both of them are likely to be into the double-digit growth hereafter, and I think that could possibly mean higher amount of premium collections and the business profits. The other strong point which we find in this company is that this is the first company among the private insurers who have been profitable, and I think that's where I like the management strength in this company. In an insurance business, it is always challenging to make profit in early years, and I think they have been successful in demonstrating their amount of profit. Though believe that I think with this kind of $1 trillion worth of investments are happening in a shorter period of time from now, I think insurance businesses could possibly grow systematically. Believe that I think this particular businesses would also at some point of time go for listing, and that could find unlocking of the valuation for shareholders from Bajaj Finserv. So that could be another play that one could keep it. Maybe I think 25-30% kind of a CAGR growth in this particular activity of both finance as well as insurance company or insurance business, I think is not ruled out. So I think with a view of around between 3 to 5 years, once again, I think you get an opportunity to buy into 25-30% kind of a CAGR growth story.
Okay, Deven, thanks so much for that recommendation. Mid-caps are on a high and we all want to join this mid-cap party. We've told you 12 recommendations. We've got 4 more ideas for you. But before that, a very short break. We'll come back with Mid-Cap Multibaggers. Stay tuned.